if we just were to take the price of gold today and divide it by 45, which has pretty much been the average price of the last 150 years, if we woke up tomorrow and saw silver at, divided by 45, $79, that would be where it should be on a 150-year average basis. But as Keith will tell you, it's coming out of the ground at 6 to 1, not 45 to 1. So you can argue that price is 11 or 12 times under what it should be based upon its geologic footprint in relationship with gold. I mean, all of this is theoretical, but any way you look at it, silver's time is coming. It's here. It's disappearing. The big banks are very, I think, concerned about this development where they're now being challenged by very sophisticated, wealthy players. It just seems like this might be the time that we've all been waiting for here, heading into the second half of the year, see where silver ultimately ends up. A lot of companies don't have the wherewithal to do that financially. Keith does. And I spoke with him about that too, and I really respect that. And on a larger scale, isn't that what China is doing? When they go directly to the miners in Latin America and buy doré and concentrate, send it home and refine it for the end users, rather than letting it go through the channels and pulling it off of the exchanges, which then is very transparent. By disintermediating the market, you are taking out of the equation. You see, the way that this normally works, and the reason that the bullion banks have so much sway, is that mining is very expensive. And for many years, the mining companies have really suffered with, lack of a market that was cooperating, prices that were muted, and really not much interest by the public. And so they suffered. Well, when they pull stuff out of the ground, it's very labor and cost intensive. They will call a bullion bank like JP Morgan and say, we got X amount of tons of doré. What do? They'll say, ship it to this refiner. We'll have a wire in your account in 30 minutes. So they get paid like that. They ship it off. Now it's in the hands of the cartel, so to speak, who can refine it and then put it onto the marketplace on COMEX or whatever and do what they want with it.
In the traditional precious metals market, miners often rely on bullion banks to refine and distribute their products. This process, while efficient, exposes them to a powerful cartel that can manipulate prices. However, Keith, a major player in the industry, challenges this model. Instead of working through these banks, he directly refines and sells to the public. This disintermediation strategy is reminiscent of China's approach in Latin America, where they bypass traditional exchanges to secure valuable metals like gold and silver. This shift has significant implications for both miners and the broader market.
So what Keith is basically doing is saying, screw it, I'll just refine it myself and sell it directly to the public. I'm not going through a bullion bank. I will disintermediate the process, go right from the ground to the end user. Well, that's what China's doing. And I think it's very shrewd, but it underscores what China is doing, in my opinion, when you look at it the way Keith is doing it, and it gets out of the equation not only the ability of the cartel banks to hold it, possess it, short it, manipulate it, but in the case of China, it keeps all of the information out and it disintermediates the pricing of it because the metal is coming off of places that don't affect the price. So in either respect, whether it be Keith doing this directly to the public is good for all of us and ultimately good for Keith. But when China's doing it, I think it's good for them, and it allows them to continue to accumulate stuff without the prying eyes of the IMF and without it being reflected in price on COMEX or the LBMA. And quite frankly, I don't think they care about price.
China has become a prominent disruptor in the global mining and precious metals markets. By directly purchasing doré and concentrates from Latin American miners, China refines the metals domestically, avoiding the transparency that comes with public exchanges. This strategy allows them to maintain control over the metal's pricing while keeping critical information out of the public eye. Their actions highlight the broader strategy of accumulating precious metals without attracting attention from entities like the IMF or the World Bank.
This isn't about price as much as it is disintermediating the information. Not only that, if the price goes up because they know they're accumulating it, this is what attracts everyone. People are attracted by price. Most people don't have the patience or the ability to sit and learn from guys like you and I and get out in front of it before the price moves. So when the price goes, silver is what's called inelastic, meaning it's used in industry and it's needed in industry. It can't be substituted, but it's used in such small amounts it doesn't materially affect the price. If you have a fifth of an ounce of silver in an iPhone and silver triples, it's really not going to matter that much to the ultimate price of the iPhone. You still need it. But if more and more people notice a higher price, they all start buying it, and that is what the big players do not want, where they get shut out of the global supply because everyone runs to it. The cartel has done a great job at suppressing price, but by suppressing price in a way that, with great volatility and counterintuitive to the times, it disenfranchises people. You look at all the people who bought silver during the silver squeeze that got pissed off because it didn't do what they thought it would.
For years, bullion banks like J.P. Morgan have held considerable sway over the precious metals market. They control the flow of raw materials from miners to refineries, often dictating terms and prices. This system benefits the banks, but leaves miners at a disadvantage, struggling to manage rising costs and market volatility. The mining industry has long suffered from price suppression, leading many to accept low payouts in exchange for quick cash, giving these banks immense power to manipulate the market.
And that's cartel work in action, where they held it down when it really, if price discovery would have been allowed to happen without 8 banks holding the largest concentrated short position in the history of the COMEX, well, then the price would be much higher. But you can see that's now broken, because the LBMA has the lowest silver float, 155 million ounces, that they've ever had, ever. That's 1 day worth of trading. And we're supposed to believe that it's a shortage of trucks and manpower why people can't get their bars for 8 weeks. As you can see, they've been caught with their pants down, and they're this close to the whole thing breaking. The masterful part of what China has done through all of this, and all the BRICS nations, is not gobble it too quickly, because it would have broken the system like that. Instead, they've been doing the little by little by little and pickpocketing it every way they can since you and I started talking about this 5 years ago, and it's coming to an end. And again, I do believe it is, which will ultimately signal, perhaps, I don't want to get out in front of my skis, but perhaps this is the beginning of the end of the manipulation of the metals market. You could argue it's almost already here with gold, but look at silver. They hit it again today, and it's back up. It's barely back up, but they can't keep it down. We got futures at 39 bucks, and I don't know, if you look at the so-called resistance between here and 50, there's some at 41 and some at 42.50, or right in that range. But that so-called resistance, cumulatively,
Keith's decision to refine and sell silver and gold directly to the public is revolutionary. By bypassing bullion banks entirely, he not only strengthens his business, but also challenges the long-standing system of market manipulation. His model promotes transparency and removes the influence of banks, effectively giving miners more control over the prices they receive for their output. Keith's approach is a blueprint for others in the industry who wish to take back control and avoid being exploited by the larger financial entities.
If you look at the 1980 peak and the 2011 peak, they were both quick peaks, right? Those two levels were maybe 1 to 2 days of trading, period, over the last
45 years.
50 years, 40 years. That's not resistance in my mind. That's just a stopping point on the way. It would signal to me there would be resistance that would be easily taken out. And once you get above 50, the sky's the limit. Now, if we just were to take the price of gold today and divide it by 45, which has pretty much been the average price of the last 150 years, if we woke up tomorrow and saw silver at, divided by 45, 79 bucks, that would be where it should be on a 150-year average basis. But as Keith will tell you, it's coming out of the ground at 6 to 1, not 45 to 1. So you can argue that price is 11 or 12 times under what it should be based upon its geologic footprint in relationship with gold. I mean, all of this is theoretical, but any way you look at it, silver's time is coming. It's here. It's disappearing. The big banks are very, I think, concerned about this development where they're now being challenged by very sophisticated, wealthy players. It just seems like this might be the time that we've all been waiting for here heading into the second half of the year.
Silver is a unique commodity. It's essential in industries like electronics, but its small usage per device, such as in smartphones, doesn't directly influence the price of the finished product. However, silver's role in manufacturing makes it an inelastic good, meaning its demand won't decrease even if the price rises. This characteristic is something the market manipulates heavily, with banks suppressing prices to keep the supply chain intact. Yet, the growing demand for silver could eventually force a price surge, creating challenges for the industry that could be impossible to contain.
See where silver ultimately ends up. The little guy is always late to the party and moves after it's been reinforced by the insiders. That's why so few people ever succeed in investing, because they follow the herd and the little man is part of the herd rather than stepping out on the branch all alone with the cold breeze on your shoulder. I want to mention just a couple other things while we're on the topic, and I think that you could call this concerning for the dollar, but you could call it very bullish for precious metals, because most of the other currencies around the globe have been lowering their rates, right? And you hear Trump freaking out that Powell hasn't done it. And since the U.S. has not lowered rates, the currency in a normal situation would be rising with high rates, right? And everyone else has low rates, so more people buy dollars to because of a strong dollar and of high interest rates. They would take advantage of that. But it's an ominous sign, in my opinion, that the dollar has been falling instead of rising. And if rates remain high, which are still historically low, the government expenditures for interest rates will continue to skyrocket, and this would cause, who knows, the anticipated crash to happen quicker.
In recent years, events like the silver squeeze highlighted the volatility and manipulation in the precious metals market. Many retail investors bought silver hoping for a surge in price, only to find it suppressed due to the influence of the cartel. The short squeeze revealed how these large financial institutions with concentrated short positions can control market movements. As silver prices rise, more people join the buying spree, which further fuels the manipulation, preventing a natural price discovery process. Ultimately, the public's frustration with this manipulation becomes a significant part of the narrative.
If rates are lowered, it could cause inflation to ramp up faster than anyone is anticipating. This is how they're caught. But the fact that they have higher rates than just about everyone and the dollar is falling is an ominous sign, in my opinion, for the dollar, for sure. And a very, very, very bullish sign, if you will, for precious metals. But you know what this all boils down to, then again? It's that people in the U.S. seem to think because things don't happen in a nanosecond that they won't happen. Much of the world has a different approach on this, as we were just saying, and they take the longer-term approach. And that's what you are seeing happening across the globe. They're all looking at a long-term approach to set the stage for either a new monetary system, a reset, or just a new pathway to the way things are done. We see that in what's happening with the BRICS, I believe, very, very closely. Very, very closely setting up a new system that hasn't been really noticed, not only by the people in this industry to the degree that I think they should, but maybe even not even noticed by President Trump when he speaks of the BRICS. I think they're kind of using the back door to it, and I'd love to, if we have time, explain it with the new bridge technology, just an idea that I have.
Yeah, sure, go ahead.
So, in essence, he's threatening again, right? I'll add another 10% if any of these countries decide to, join on with the BRICS. It's getting hard to do. By the way, 10 new countries have joined BRICS as official partner countries for this. This came out. Belarus, the or national state of Bolivia, Kazakhstan, Cuba, Indonesia, Nigeria, Malaysia, Thailand, Vietnam, Uganda, Uzbekistan. These countries represent 55% of the world's population, 45% of GDP.
The London Bullion Market Association, LBMA, has reported a dangerously low silver float, just 155 million ounces, the lowest ever recorded. This represents less than a day's worth of trading. The shortage of physical silver, coupled with long delays in deliveries, suggests that the market may be on the verge of collapse. These issues expose the fragility of the global precious metals market and highlight the failure of traditional systems to meet demand. The cartel's ability to control the flow of silver is increasingly being challenged as the global shortage becomes more apparent.
Blah, blah, blah. One of the things that I think isn't being talked about enough. Now, we talked about the Bridge. We talked about how it's now, they connected it to the 11 Asiatic countries and the 5 Middle Eastern countries. We talked about that. And I referenced in my presentation with you the other day, putting it in context with the Belt Road and all of that stuff. But I've been thinking about it a little bit more. And Trump is focused on a BRICS currency, right? This is what's upsetting him, even a BRICS settlement currency. But what has China done? They have started building their vaults, this multinational, multi-regional vault. Well, not multi-regional, it would be a distributed set of vaults through different countries, okay? And we talked about that just a few days ago on our last show together. But the way that they're doing it is to internationalize the yuan. You're not hearing of the unit token. And remember, Dilma Rousseff, the president of Brazil, said we agreed on, former president of Brazil, and the head of the BRICS New Development Bank last year said we've agreed on a new settlement token for the BRICS called the unit. Well, that's gone quiet, right? So they roll back out the Bridge, call it a different name. They connect these Asiatic countries. They talk about internationalizing the yuan for the Belt Road, okay? So the yuan right now is now convertible to gold on the Shanghai Metals Exchange in yuan, not in dollars. So it's not backed by gold, but it's redeemable in gold. This is a big deal. So it's not like it's replacing the currency, it's replacing what backs the currencies. In this case, it would be the Treasury if we were using the US. So all of these countries, in other words, can trade their goods for yuan over the bridge network, which is not compatible with the dollar, the pound, or the euro, and they can then convert into gold for whatever amount they want, whether it be just imbalances or all of it, right away. And this multi-jurisdictional set of vaults that they're building, they've already done the one in Hong Kong, and now they're going to do the one in Saudi Arabia, with more on tap in Africa and the rest of Asia along the Belt Road. They're going to internationalize the yuan. And so Trump never said that China couldn't do this. I believe Xi Jinping said, screw it, we'll do it then. And what they're doing is, in essence, the beta test. And the beautiful part about it is that it's not a BRICS common currency, it's China doing it, but if you're building the rails to this entire system using Bridge technology, how hard would it be for them to, once it's operational with the yuan for gold, how about they then just bang, switch the BRICS unit token onto this set of proven rails? That's what they're doing. They're beta testing it, and they're keeping Trump away from getting angry about the BRICS unifying. And I thought about one other thing too, and that is, why would the US be talking about gold revaluation? And why would Judy Shelton be talking about 50-year treasuries pegged by gold? Why does she say that he'll issue them next July 4th, 2026, in conversations that they've had together? Why? Well, the only answer I can think of is that they're going to sacrifice the dollar. The United States will sacrifice the dollar.